And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast. Today is Monday, September the 27th, beginning of a week that looks to be very interesting and challenging for traders. As usual, my name is John Hoagland. Thanks for trusting me with your time. Hope you had a nice weekend. I hope you are prepared for yet another exciting and challenging week in trading. Crude oil just opening up here with some long overnight inventory, looking maybe like they just left the opening range at the high of the session. We'll look at that in the charts very shortly. As always, we'll be looking for context, good risk management, and infinite patience. This morning, the durable goods number came out, 1.8%. That's a pretty good number. Apparently, the inflation that is currently with us is not keeping people from continuing to buy durable goods. This morning, we had Chicago Fed Evans discussing the fact that he's worried there's not going to be enough inflation in coming years. I find that to be very interesting. Let's see what else we've got going on this week. Being Monday, we have the Dallas Fed at 9:30, not expected to be all that impactful. A couple of bill auctions, and John Williams is speaking at 11 o'clock Central Time. Tomorrow, trade numbers, international trade in goods, 7:30, wholesale inventories, 7:30, retail inventories, 7:30, Central Time, of course, Red Book, 7:55. Evans speaks again tomorrow at 8 o'clock Central, right as crude oil opens up. We have Case-Shiller home pricing, FHFA home pricing, and at 9 o'clock Central tomorrow, consumer confidence. Wednesday, pending home sales, 9 o'clock Central, 9:30 EIA petroleum status report. John Williams speaks. Thursday, here's the big one. GDP numbers for the second quarter, final number coming out at 7:30 Central, as long as the usual jobless claims on Thursdays. Chicago PMI at 8:45. John Williams speaks again, and then, of course, nat gas at 9:30, and then rounding up the week here on October 1st, Friday, personal income and outlays at 7:30, PMI manufacturing final at 8:45, and ISM manufacturing index along with construction spending and consumer sentiment at 9 o'clock Central Time. So there's a lot of data coming out. Not only that, we've got our equities opening slightly lower this morning, opening largely in balance, but there's a lot at stake this week. China keeps Evergrande disaster at bay, at least for now. There's going to be some continuing infighting in Congress in the House over the U.S. debt limit. The House of Representatives they've pushed back their voting on the $1.2 billion infrastructure deal until Thursday, while trying to get the $3.5 billion deal together. Investors are going to be eyeing Fed speak this week because we're all going to be looking for information when the tapering of bond buybacks will begin. And as far as crude and nat gas prices are concerned, they continue to rise on supply worries. As usual, make sure you like, share, comment, question, feedback, and heckle at will. Make sure you subscribe to our YouTube channel so you get notified when we do go live. Got to say good. Let's check the VIX here this morning. VIX, last I checked, 1924, which is 8% higher than the close on Friday. Dollar index up slightly at 93.38, and the 10-year yield up also slightly at 1.49%. Gotta say good morning to everybody. Eddie, first in the room, you win the prize. Good to see everybody this morning. Steve Lee, Frederico, Murph. Great day to make $1 million. Isn't any day good to make $1 million? But I'm with you. I'm going to take what the market gives me today. I'll be happy green. Good morning, Brian, Harry, Gordon. Good morning, Drew, Brett, Theo, Janus, Bill Phillips. Good morning, Jim, George, Laura. Good morning, Zerain, Cam. Good morning. Fred is gloating about the Green Bay Packers. The Bears were absolutely abysmal yesterday. New quarterback trying to figure his way through. I think he was sacked about 19 times and had a total passing yards of net positive 1 yard. So we've got a little bit of growth to go with our new young quarterback. Fred, I'm glad you're happy that the Packers were victorious this week. Somebody must have woke Aaron Rodgers up. NM, sup? Dante, Rob, Jason, Greg, KM, Robert S., good morning. Don K., Ricardo, Justin, Jerry is awake, Keith, Vince, and Trading Research. Today, it's week 4 of the Futures 401, 101 through 401 classes. Today, we're going to take a bit of deeper look at the auction process because tomorrow and Wednesday, we're going to be talking about, an introduction to the market forecast. Market profile, market forecast. This is the market forecast. And then we're going to end up with context, hypothesis, and planning on Thursday. We also have group coaching this Wednesday. Here's the link to sign up for that. That first link is for Futures Trading 101 through 401, and then the next link is for group coaching, which is at 1 o'clock on Wednesday. That's just an open question and answer session. Looking forward to seeing all of you there. Fred saying, hee hee. Most of my family lives in Wisconsin. I've got 2 brothers, and my mom live in Wisconsin, so I'm very familiar with the fandom of the Green Bay Packers, although I'm still a Bear. I don't have any real disdain for the Packers. I know it's unusual. Some people think, how can you do that? But hey, I am who I am. Good morning, Jason. Ophelia, good afternoon from Lagos, Nigeria. With the ban of currencies in China, what effect will this have on the market? Ban of cryptocurrency. Well, they're not the first to ban it. India was, I think, the first to ban it. Now China has banned it. What effect is it going to have on the market? I don't think it's really going to affect other markets other than cryptocurrency all that much. We still have, other tools to guard ourselves against inflation. Good morning, Andres. All right, so let's dive in to the charts. As always, we start with the daily in Crude, and just kind of a quiet two-sided auction coming into the crude oil this morning on the regular trading hours. But we do have some interesting situations going on, so let's go ahead and take a look. All right. So we've got 1, 2, 3, day 4 of one-time framing activity to the upside. One-time framing activity on the daily chart simply means that each consecutive low is higher than the previous and each consecutive high is higher than the previous. We added 13,000 in open interest on Friday on a continuation move. Volume falling off just a little bit, but still holding up relatively well. The upside auction, to be quite honest, is looking relatively healthy at this time. Doesn't mean it's going to go in a straight line, but we're looking at at some pretty consistent buying coming into this market. Again, supply issues seem to be the fundamental behind that. All right, so here's Friday's profile, looking like a short covering profile, but we did add again 13,000 in open interest. Settlement is 73.98 right here. Put that on your charts. We can see that all of our activity overnight was above settlement. That gives us the idea that all of our overnight shorter time frame traders are holding longs and looking for help from longer time frame traders to continue to push price higher. If it doesn't happen, that's when we may come into our gap close. Remember, we do have a gap. Regular trading hour session to regular trading hour session, there's no overlap. That creates the gap. So I'm going to be looking for gap rules. If we can't close this gap relatively early, I'll look for continuation to the upside. A gap a close of the gap may just mean that that our overnight inventory has been reconciled, and that takes selling power out of the marketplace. We've got last week's high right at Friday's high, and that can also give us the opportunity to look for longs. It's upon acceptance in value from Friday where I would begin to worry about price moving lower. So we've got our open. I don't think our opening range is necessarily neither the high nor the low at this time. So value low on value area. Well, looking to buy weakness in this market. In other words, the previous weekly kickoff low is right down here at 73.60, which would be a complete value area special situation play if we even get to that level. But I'm still going to be looking for opportunities to buy weakness. It's going to be a little bit more difficult if we cannot close the gap, if we just continue this push to the upside, and our opening range is not the low of the session. It's hard to find good reference for continuation. So be careful, be cautious. It's only Monday. Like Murph says, we're not looking to make $1 million today. We're just looking to get what we can out of the market. So try and again stay patient. Here's the E-mini S&Ps. It's going to be again a very long, I think, challenging and interesting week in the markets with the political situation here in the U.S. and all of the economic data coming out. All right, so we've been seeing volume falling off as the market has been kind of returning back to the center of the all-time high in our recent swing low. We've lost 8,600 in open interest on Friday. The market kind of slowing and centralizing between the high and the low. It's looking for new information. It's going to be a critical week with a lot of political infighting and possible headline risks. So the signs that we're in balance are we're centrally located between our high and low, weekly kickoff high and low. We've got last week's high was looked above last night, was unable to necessarily accept above it. Take a look at the 30-minute chart and see if we're getting any good luck or information from that. So we are setting up, if you look at this, a bit of a bear flag here. So we're going to be focusing really on looking for opportunities on this lower trend line if we get that opportunity. We can also be focusing on the upper trend line as well as weekly kickoff high. So this bear flag we are creating may create an opportunity to the downside upon acceptance below the channel. Where are we today? We're in the middle of the channel. Settlement is 44.45.75. Boy, that was hard to say this morning. The market has really not a lot of overnight inventory with which to deal with. We got too long. Maybe we're a little too short here, but we're right in value from Friday. So there's very little change in the perception of value. We've got some weaknesses down below. We have some naked points of control that remain unchecked down to our lows. We also have one naked point of control off the all-time high day that's above the weekly kickoff high. So we're not really focusing necessarily on anything inside this channel. So try and stay patient. Look for opportunities as the day goes on. When we open in range and in value, sometimes you're better off waiting for more information as the day goes on, and you might find better trade locations in that regard. Take a look at the Nasdaq now. And we'll go to the daily. Nasdaq has already kind of broken out below this assumed bear flag on the 30-minute chart, not necessarily on the daily. It's a shorter term look on the 30-minute chart. So open interest and volume slow. We've lost 1,400 in open interest. We lost a little bit of volume. The market, again, centrally located between the high and this recent swing low. We've got weekly kickoff low, which we looked below last week. We closed back above it. I left it where it is because I really feel like it's pivotal in the fact that if we get back down below it, we're going to be back in this sticky area, and we may get stuck there for a while. But if we reject it, then I see more continuation to the upside. We've got a little bit of coiling activity here. We've got lower highs and higher lows coming to perhaps an apex. Might be an opportunity down here for us, but this is kind of hard to see on the daily chart. Remember, this is going to be somewhat of a critical week politically and economically. So here's our bear flag. Got a couple of good points of contact on both sides of it. The market is telling us that this bear flag, if we continue to accept below it in the longer time frame, is going to mean that sellers may take control of this market. There are some things to be, kind of repaired with a couple of naked points of control down below weekly kickoff low. The swing low that we were looking at is right here. This will also be important should we accept below weekly kickoff low. So there's more of a chance of a gap here in the Nasdaq on the open than there is in the S&Ps. Anything is, of course, possible. Settlement in the Nasdaq is 15,318.75. 15,318.75. Put that on your charts. We're getting a little bit short time frame here. So all of these shorts are going to be looking for continuation to the downside offered up by longer time frame sellers. If they don't come in, we find support here. Our last week's point of control from last week is just below that. This looks like a relatively target-rich environment down here, one direction or the other. These points of control, remember, are comfy levels that a lot of trade occurred at. We tend to visually make price go there to see if there's any business left to do before leaving the area. So here we are. We're going to open with a gap. Keep gap rules in mind. You've got a little bit of support perhaps down here, but if we don't see new sellers come in, we may see this market snap back into value, which would say, all right, let's just stay calm and look for better trade locations as the day goes on. On to gold now. Daily. On the way up, we had 1, 2, 3 bull flags. On the way down, we've got 1, 2, 3 bear flags developing. Interesting. Volume was low. Open interest was moot on Friday. It was an additional 100 contracts, absolutely meaning nothing. The short time frame downside auction is starting to look weak, almost the same way the upside auction started looking weak with these 3 bull flags. We've got 3 bear flags now. And the downside auction is losing volume. It's losing open interest, or at least not gaining open interest. So this downside auction is beginning to look weak. We do have a potential target towards our weekly kickoff low, which is 1722 even. We've got last week's low, which would be a visual. Take a look at the 30-minute chart. So here's our potential next bear flag. We're bouncing 1, 2, 3, 1, 2, almost 3, kind of rotating back and forth between the two. The opening range in gold is the low of the regular trading hour session. If you want to put that on your charts, it's 1748.10. Overnight inventory or positioning is flat. We don't have any short time frame traders to look for them to unwind and for us to take advantage of. We open in range and in value. So this becomes a situation where are we going to reject value from yesterday and push to points higher, or are we going to reaccept inside value from yesterday and take another look down here at this bottom of the channel, maybe bottom of value from Friday? But right here in the middle, I really don't want to do all that much. I don't think that there's a lot of energy in this market. I think we're going to be looking to wait for better trade locations. And the better trade locations I'm seeing, the channel high, this naked point of control, which is no longer valid. Let's take that off. And neither is this one. So we're just really kind of focusing on that. Oh, that's the high. That's the overnight high. I'm thinking it's an old point of control that I accidentally left on there. All right. So centrally located inside this channel here. Not really that interested. I think it's a 50-50 shot. If I buy it here, my risk is up here. My risk is down here, and my target's up here. If I sell it, my risk is up here, and my target's down here. I don't like it. It's 1-to-1. I'm not going to do that. I'm going to be patient, wait for better trade locations. Take a look at the euro in our other two markets. So let's see here. 1, 2, 3. Fred, do you think the stack of buy orders at this level might be getting a little bit tired? I'm going to be looking for an evidence of acceptance below weekly kickoff low today to see if we can continue this market to the downside. If we can't, range-bound activity remains the rule because we haven't accepted outside of it. We're fading the range. We're fading weekly kickoff low, basically, which is 117.05. We've got 11700 and a half ticks as our low from today. It's 1/2 a tick below the low from last week. So it's still providing a degree of support. We may find an opportunity here. The downside auction appears to be relatively healthy, except for some open interest, except for some lower volume. We did drop 10,000 in open interest, but just, by the tenacity that this market is showing at a support level, it seems as though there's still people available that think this market is going to be going lower. Of course, a lot of that depends on the dollar. What else? What's the 30 look like? So no gap, really just kind of range bound here. And again, supported by our weekly kickoff level, an area that we're looking for longer time frame traders, longer time frame participants to be forced to or decide to adjust inventory. When we sense that, we know not to fight them, and we can find that our direct competitors, the short time frame P shooters, end up the wrong way, and we can take advantage of when they unravel, a similar way that sometimes the overnight inventory, which is shorter, weaker hands traders, get too short, and we see them bring price right back to settlement. We can take advantage of those. What else did I have for you here? Gap rules. No gap. How about acceptance or rejection from Friday's area of value as an opportunity for us? Let's take a look now at the nat gas. All right, so I did a little bit of research this weekend. I'm starting to develop some weekly kickoff levels here. Of course, this one just makes sense. This swing high from back here on September 15th. We've got our weekly kickoff low for the natural gas, 4,872. Last week's low, last week's high. We're above last week's high already and continuing to move to the upside. 1, 2, 3. Bigger volume, but this is also part of rollover. All right. Tomorrow is expiration for nat gas. We won't have to worry about rollover anymore. However, much of this loss was in October and November. So we lost a little bit of open interest on this move to the upside on higher volume. Again, that's a little bit blurry due to rollover. let's take a look at the 30. I mean, the market is obviously getting legs to the upside. And we don't know how much money there is to come back into this market or to continue these markets to the upside. I mean, all right, here's settlement is down here, 520. All of our overnight inventory is to the upside. I'm going to put the profile on here for us. So we've got this gap to deal with. All of these overnight longs are weaker, mostly weaker hands traders. We're going to be looking at them as they're going to be looking for what? They're going to be looking for longer time frame, regular trading hour traders to continue to buy this market and push price higher. If they don't see that, it's going to give us an opportunity to see this market come back to lower levels to look for better trade locations for longs, if that is indeed in the cards. You know, the market has been one time framing since 6 o'clock this morning, higher highs, higher lows. Is it breaking here? We've got inside day and an inside bar on this 8 o'clock bar. Is that going to be changing the one time framing activity? Is it going to be a hiccup? Are we going to continue higher? Are we going to start to scare some of these overnight longs to give us a better opportunity at lower pricing? Okay, this naked point of control right here, this past naked point of control is still going to remain because it was not traded to during regular trading hour session. It can be a visual that price can be driven to. Take a look at the 10-year and we'll get down to business. Whoops. So the downside auction seems to be pretty healthy. Our breakout below this previous weekly kickoff line last week certainly provided some good downside opportunities for us. The open interest added 10,000. Okay, volume was a little bit off on Friday, but that's all right. That's typical on a Friday. I'm still planning on looking for opportunities to sell strength if I can get it. Last week's low, it could be an opportunity. It's a visual. It's a swing low that's a lot of people are going to be looking at. Take a look at the 30-minute chart and we'll wrap up the forecast. I want to get done before the equity open for everybody. So we've got a gap to the downside. Settlement is right here, 132.00 and a half ticks, 132 and a half ticks. Overnight shorts, we're trading gap rules. Where do we go? Did we just reconcile some of our overnight shorts in this right here? Are we going to head back lower or back higher? Nobody really knows. Look for opportunities at the extremes of the day time frame to look for better trade locations, because remember, it's all about risk management. Anytime we're thinking about anytime I'm thinking about taking a trade, my first thought goes right to what is the risk? Where is the point of invalidation for that trade? You're welcome, Fred. Did I miss the weekly kickoff levels? I don't see them in my inbox. Check your spam filter. Unless you opted out of our emails, you should have gotten it, Chris. You can always check with our support team to have them resend it to you or see if they can find out what happened with it. All right, let's take our deep breath. Be humble, grateful, and creative today. I'll see you for futures 401 today. Again, volume and open interest. Questions and comments are always welcome. Always looking for feedback on how we can do things better, and always appreciate that. So get out there and profit today. Trade well. I will see you in the pit in about 1 minute. Let's get out there. Have a great trading day. We'll see you later.